Investing is a long-term journey, and you learn a lot along the way. And a lot of those lessons really come from mistakes that you make along the way as well. I'd like to share the mistakes that I've made along the way today so that you can avoid making those same mistakes. I'm Jason Kish. I'm in the commercial real estate investing space, and today I'm going to break down the top 10 investing mistakes that I've personally made. Forgive my voice, it's going out a little bit. I had a bit of a cold going into the weekend and I had to push through it because I was at the Limitless conference on Friday, Saturday, and Sunday, which was absolutely awesome, made a ton of great connections. Number 10, and I don't really even think this one's a real big deal, although it's not totally ideal. I bought a brand new car when I was 24 years old. It wasn't super expensive, it was a Ford Focus ST, it was about $23,000. And I actually had a ton of fun in that car. That's why I can't say it's a total mistake. But what I should have really done is kept my Chevy Cobalt at the time with my nice roll-up windows and manual locks. It had a ton of life left in it, and I really should have taken that money and started investing earlier. Number 9. I maxed out my 401k as soon as I could. Every dollar that I had available after my expenses, I put into my 401k. It's not really the best strategy because I didn't have that high of an income at the time, so I wasn't at a high tax bracket. So I avoided paying taxes on the way in, but I might end up actually paying higher taxes on the way out when the money is removed. That's how a 401k works. What I should have done is I should have put them into a Roth IRA because then I pay the lower taxes that I was at that point on the money going in, and then when the money comes out, then I don't pay taxes at all. So it probably would have been more tax efficient, plus the money that you put into the Roth, the principal amount that you put in, you can access after 5 years, so it's not all locked up until you're 59 and a half. Number 8, rolling all of my 401k money into the next 401k. And that's because a 401k has very limited investing options. What I should have done instead is rolled the money from the 401k into an IRA. Now, specifically what I like to do with an IRA now that I know about this is roll it into an IRA, and then if you don't like where the market is, maybe it feels a little frothy, you're not going to pull your money totally out of the market because timing the market just generally doesn't work. But it does give you the option to maybe if you want to pull some money out of the stock market and you want to lend that money or you want to put it into some other type of investment that isn't just the stock market, you can do that through an IRA where you can't do that through a 401k. Number 7. Buying individual stocks without doing deep dive research on the companies. There have been at least 5 occasions where I've been tempted in over the years to buying stocks just because it felt like the business was going in the right direction, or I thought that this industry had a lot of growth or something like that, but I didn't really know the fundamentals of the stock or maybe even the fundamentals of the industry. This has not worked for me. I would instead recommend if you want to put more money into stocks and you haven't done the research that's necessary, I would just put it in an ETF that tracks the S&P 500 or something large like that. The next 2 that I have are related to having rental properties when I was younger and being an absolutely terrible landlord. I didn't run it like a business and I really paid because of that. So number 6 is not raising rents when I should have. I inherited a lot of the tenants from prior owners and their rent was already set too low because the prior mom and pop owner also didn't have their rents optimized. So I had rents that should have been raised the last 3, 4, 5, sometimes 10 years. And I was really missing out on money, missing out on performance. And then ultimately, if you do go to sell that property, it actually harms the value of that property because someone wants to see that you can actually make money at the purchase price that you're selling it. Number 5. Not evicting people when I should have. There were several occasions where people were late on rent or they got a pet that they shouldn't have and they were destructive, or, there were a couple scenarios that come to mind. But there was one that is actually pretty humorous, and I actually just brought this up at a real estate meetup. I had their rent way too low. They were paying $275 a month. And at that time, it probably should have been about $500 a month for the for the unit that they were in, and they were back 2 months in rent, and I didn't evict them. What I did instead, this is what a professional property manager would do, treating it like a business. I took a Romanian RPK, which is like a beefed up AK-47. It's the only thing of value that the tenant really had. I drew up an agreement that he had to pay me back for the back rent before he got the gun back. I actually did get the rent back, but it's probably not the #1 route that I would take. Number 4, this is where I had a really strong conviction and I didn't follow it. Gold and silver, when I was just coming out of college, they were at very low levels. I know that inflation continues to rip forever because we have a fiat currency and there's no choice other than the government to keep printing as they've been doing, get into more debt, and it drives the value of gold and silver higher. I knew that I should have bought more and I didn't. And now that's something after gold and silver, since being in high school, it's up about 15 times what it was at that time. And I really should have been dollar cost averaging in much heavier. And again, that's because it's a conviction that I studied deeply. And I know that the framework is something that gold and silver, the values will go up in the long term over my lifetime. I wish I was stacking harder. Gold and silver aren't as complicated as you would think to own because there are ETFs like GLD and SLV and some others that you can just buy on your trading platform. You could pick up the physical type, but just remember, if you're going to store that in your house, that is a real risk to you. So I would advise that you be very cautious with that. The other option, if you're looking to acquire very large amounts, is you would want to contact a vaulting company that will hold that for you somewhere else so that you don't have that risk in your house. Number 3. This is where I'm starting to get into the bigger mistakes. I really regret selling any of my cash flowing rental properties. I bought right. I bought them at really low prices, but I should have had them professionally managed. It was actually really good to learn how to do the property management, what goes into it, how to repair things, how much it should cost to repair things. It was good to learn those things early, but then I should have turned it over to a property manager because the properties would have supported that and they would have raised the rents as they should have and done some other better practices. And my family life was just getting too complicated and I didn't want to run them myself. If I would have put a professional property manager in place, I would have additional cash flowing rentals right now. And the values are way higher than when I bought them and when I sold them. So this is a real hit to my net worth. The fact that I didn't follow my standard convictions, which is real estate appreciates over time. As long as it's cash flowing, keep holding on to it because inflation will continue year after year after year and will push rents and will push values. Number 2, this is not a direct investing one, but this has a big impact. I wish that my wife and I would have figured out a better budgeting system a long time ago. It took us over 10 years to get on the same page. I'm the envelope system ultra nerd, wants to save as much as possible. My wife doesn't really care about budgeting at all. So what we ended up doing is ignoring about 2/3 of our expenses because you're not going to change things like a mortgage or a car payment or something like that. And also, if I run over the gas budget, am I just not going to go to work for the next 5 days? It's unrealistic to say that you're going to budget certain areas. We budget for things like vacations, gifts, food, going out to eat, things that are variable and it can have a really large impact whether you keep a close eye on it and you keep a real budget and you stay under the budget, or if you're just spending at your whim. Okay, number 1 mistake. Again, this is just not following my convictions. I really regret selling the 2 houses that I bought and had incredibly low interest rates on. I bought one of them, refinanced it, and then I made it into a cash flowing rental, and then I bought another house that had an even more ridiculous interest rate, 2.49%. And I really regret selling those houses to buy my next house when I moved. I really should have kept those because the first one was a cash flowing rental, and the second I could have easily converted into a cash flowing rental. I know that that mortgage was going to be paid back with inflated dollars that are going down in value over time. Rents will keep going up and the value will keep going up on that house. I really regret selling those 2 houses. I wish I could get them back, and it really is a substantial hit to my net worth, the fact that I did sell those. I hope that it's been helpful hearing about some of the mistakes that I've made along the way, because I wouldn't want you to have to unnecessarily make the same mistake. I would love to hear from you in the comments about some of the biggest investment mistakes that you regret in the comments. Please like and subscribe because it really helps the channel immensely, and I look forward to seeing you on the next one.